BlackRock just moved $2.1 trillion out of the US. Yes, you heard that right, $2.1 trillion. The world's largest asset manager with more money than most entire countries is making a move that could send shockwaves through the financial world. You'd think this is a sign of disaster. The largest player in the game pulling out. But hold on. This isn't what the headlines want you to believe. This isn't just money leaving America. It's where it's going that tells the real story. What does it mean for the global economy? And more importantly, what does it mean for you? This could be the start of one of the biggest wealth transfers we've seen in decades. But here's the part no one is talking about. The opportunities created by BlackRock's move could change the way you think about investing, and you might not even see it coming. Now let's break this down. When you hear that BlackRock has moved $2.1 trillion, it sounds like a major panic, right? But here's the truth. It's not about fear. It's about opportunity. The headlines are focused on the exit, BlackRock pulling money out of the US, but they're missing the bigger picture. This move isn't just a shift in dollars. It's a strategic repositioning for what's coming next. BlackRock isn't running from America. They're setting themselves up for the future. And here's the burning question. What does this tell us about the global economy? And more importantly, what's coming for the everyday investor like you? This isn't just about moving money. It's about what's happening underneath the surface that you need to know. Here's the big claim. BlackRock isn't abandoning America. Far from it. But they are being selective. They're reducing their exposure to long-term U.S. debt, particularly 20 and 30-year bonds. Why? Because holding these bonds is getting risky. You see, when you're dealing with a national debt that's approaching $38 trillion, long-term bonds become a gamble. It's not that America is going to default tomorrow, but the math is changing. If you were to lend your friend $100 for 30 years at 4% interest, but then he offers you the same $100 for 5 years at 4.5%, what would you do? You'd take the 5-year deal, right? Because you don't know what's coming in 30 years. And that's exactly what BlackRock is doing, playing it safe and reducing their long-term risk. But here's what the headlines didn't tell you. BlackRock is still heavily invested in U.S. equities, particularly companies tied to the AI boom. If they were really fleeing the U.S., would they be doubling down on these stocks? No, they're just less excited about U.S. debt right now. And that's where the opportunity lies. Now, let's talk about how things are heating up. This isn't just a BlackRock move. It's a sign of something bigger happening across the global market. When you see a giant like BlackRock pulling back from long-term U.S. debt, it's a ripple effect. They're not the only ones thinking this way. Central banks around the world are reducing their U.S. debt holdings too, with billions of dollars leaving the system. It's not a collapse, but a shift. This is the beginning of a new financial landscape where long-term U.S. debt no longer holds the same attraction it once did. And this shift, it's normalizing something that should feel unsettling. The world's largest financial institutions are moving away from U.S. debt at a time when the U.S. government's spending spree continues. And here's the kicker. This shift has only just begun. As BlackRock and others make these moves, you need to understand that this is part of a larger pattern, one that could change the way you think about the future of investing. Let's dig deeper. BlackRock didn't just reduce its U.S. debt exposure. They've gone global. They're putting money into Europe, Asia, and emerging markets. This isn't panic, it's diversification. The U.S. is still a powerhouse, but the global landscape is shifting, and BlackRock sees that. They're betting big on AI infrastructure in Asia and defense stocks in Europe. And here's where it gets interesting. While they're reducing exposure to U.S. debt, they're still investing heavily in U.S. equities, especially tech stocks tied to AI. If they were truly pulling out of America, they wouldn't be doubling down on the U.S. tech sector. This is a calculated move, not an exit. But here's where it flips. BlackRock sees a global future, and so should you. The opportunities are spreading across borders, and the U.S. may not be the only game in town anymore. Things are moving fast. BlackRock's global diversification is just the beginning. Now consider this. Central banks are cutting back on U.S. debt and the dollar is weakening fast. In fact, last year saw the dollar's worst performance since 2017, down 9.4%. Meanwhile, international stocks, especially in places like Europe and South Korea, are soaring. Germany's up 23%, Spain's up 49%, and South Korea is crushing it with a 76% gain. So what does this all mean? The U.S. dollar is weaker, making international stocks more attractive to U.S. investors. BlackRock knows this, they're shifting focus, and they're doing it with precision. Now, with the dollar weakening and international markets waking up, what happens next? If this trend continues, the wealth shift could be massive. The question is, are you positioned to take advantage of it? Now let's shift gears and think about you. How does this move impact the average investor? You've been hearing about the big players, but what about the everyday person just trying to grow their savings? The weakening dollar means it costs more to travel abroad, but it also means international investments are becoming more valuable. Companies that export goods from the US are becoming more competitive, and commodities like gold and silver are seeing a rise. If you're invested in the right areas, this could be a big win. But here's where it gets personal. If you're not paying attention, you might miss the chance to pivot your portfolio in a way that benefits from this global shift. If this feels familiar, if you're already thinking about how to position yourself for these changes, let me know in the comments. Here's where it gets a bit deeper. Why is this happening? It's not just about BlackRock or the dollar. It's about the system at play. The truth is, institutions like BlackRock understand the game. They know the mechanics of the financial system. The dollar is weakening because of the massive national debt and endless government spending. The U.S. can't keep printing money without consequences. Meanwhile, foreign countries are diversifying away from U.S. debt, and corporate bonds are becoming more attractive. It's all part of a bigger picture. The system is shifting and the wealthy are adjusting while you might still be holding on to outdated strategies. This is where the real insight lies. When you understand the mechanics of the system, you can see the opportunities others miss. It's not about being scared, it's about being smart and strategic in how you play the game. So what happens next? Well, there are two possible paths forward, and neither one is clear-cut. On one hand, the global market could continue to shift away from U.S. dominance. If the dollar keeps weakening, more investors will look overseas, and international stocks could continue to outperform. BlackRock's moves are signaling that they're betting on this future. On the other hand, the U.S. still has the most innovative companies, the largest stock market, and the deepest capital markets in the world. That's not going to change overnight. If you're positioned well in U.S. tech stocks, especially those tied to AI, you could see major gains. But the next few months will be critical. The momentum is already building, and the next move is already in motion. The question is, will you be ready? So here's the big takeaway. BlackRock's move isn't about abandoning the U.S. It's about strategic adaptation to a changing global landscape. The wealth transfer is happening and the opportunities are wide open. But the real question is, will you position yourself to take advantage? Don't just follow the headlines and get caught up in fear. Think about where the real value lies. The smartest investors are always adjusting and evolving. So if you want to stay ahead of the curve, make sure you're subscribed, because the next shift is already forming. And in the next video, I'll show you exactly how to navigate these changes and come out on top. So hit that subscribe button, because this is just the beginning.